Adrienne.
Joe, thank you very much. Let's get to Mark Hamrick, Senior Economic Analyst and Washington Bureau Chief for Bankrate.com. Thanks for being with us on Morning in America. Obviously, inflation is still top of mind for most of us. What move are you expecting from the Fed today?
Well, as we've been discussing, this move of 75 basis points or 0.75% is essentially what the Fed has led us to believe it will deliver, and that would be the third such rate hike of that magnitude, but the fifth in this series. And what the central bank really wants to do is get this benchmark interest rate above its current level, which is viewed as neutral, or essentially not having the foot on the gas pedal or the brake for the economy, and begin to put the brakes on. And if we get that magnitude of a rate hike today that we expect, that is the point at which it is restrictive for the economy, and we believe that it'll provide some guidance with respect to the likelihood of at least some future rate hikes, perhaps not as large in the last two meetings of the year after this.
You know, one of the tips that you give to consumers is to boost their emergency savings accounts. Can you talk a little bit more about exactly how much people should have in the bank and reaction to these rising rates in case of something that's unexpected?
Well, it's interesting, Adrienne, because over the years of Bankrate, we survey consumers all the time about a variety of subjects. And one of the findings that is most consistent is the number one financial regret on the part of Americans is the failure to save for emergencies. Here we are almost 3 years since the pandemic began, and we've had more than our fill of emergencies, whether it's the pandemic itself, the lockdowns, now outsized inflation, and people around the country have their own regional issues, whether it's affected by climate change, floods, electrical outages, and the like. And of course, there's always the risk of unemployment, interruption of income. So the traditional advice is that one should have about 3 to 6 months worth of expenses for emergency savings. I would just simply say, if you don't have emergency savings now, begin ASAP. Try to set up a dedicated savings account where you're taking that out of your account directly, direct debit. And then the other part is we need to walk and chew gum at the same time. We need to also save for retirement and achieve all of our other personal financial goals.
What would you tell viewers who might be debating about whether to buy a home in this type of environment? I mean, I think a lot of people have pulled back. The housing market did cool when we saw interest rates go up the last go round. But some people, I mean, rent is just as expensive as a mortgage.
That's really the double trouble that many Americans are experiencing right now. Is the rise in rent has been every bit as nasty as the continued rise in home prices. And the irony now is that the balance of power is shifting back toward the home buyer. So when the housing market was ablaze and, you know, sort of on the tip of everyone's tongue about how much home prices were rising, that sort of led to a false sense of urgency on the part of maybe some buyers to get in quickly because that's the thing to do. Now, at least, we've seen some cooling in home prices. Unfortunately, at the same time, we've had a really huge rise in mortgage interest rates with the bank rate average above 6% now, back to the highest levels in over a decade. So what I would say is it depends on your timeline, how long you expect to stay in that home. This is not a market for investors to be playing around in the sense of buying a home and trying to flip it. But if you expect to be in that home for a while, you know, be judicious about how much you're prepared to pay. Don't overpay. And, you know, it may well work out fine in the end, but you are going to pay a steep price for financing that home if you get a 30-year fixed rate mortgage these days.
Mark Hamrick, thank you for being with us. We appreciate it.
Thank you.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.